Well, good afternoon, everybody. As was just mentioned, my name is Anna Laycock. I lead an organisation called the Finance Innovation Lab. We incubate the ideas and the people who have the potential to transform the financial system. And today's panel is on those same lines, because what we're looking at is challenger banks, particularly what is the relationship between the new challenger banks and traditional models of banking. And with me today, I have people who are very well qualified to answer that question. So I have Daniel Dodelein, CEO of Orco. I have Megan K. Woods, who is Chief Platform Officer at Starling Bank. I have Didier Bacla, who is Head of Bank Build at Zopa, and I have Chris Gledhill, who is CEO and co-founder of Seco Aura. So what I'm going to ask you to do, and I'm glad you've all got microphones, that will help, is just very briefly, if you could introduce your organisation, your work, and just explain a little bit about why you think it's a force for disruption in finance. And maybe if we start with Daniel and move along, please.
Excellent, thank you, good morning. I realize that we're between you and your lunch, so hopefully you're all still awake. So I'm Daniel, and I'm the CEO and founder of Auka. We used to be called Mcash. Our company, so who are we? We were the first mobile payment technology company out of the Nordics. Now the region which is world champions in terms of mobile payment adoption, so we're quite proud of that. We're also the first company to obtain a license under PSD1, the first company to run a regulated financial service 100% in the cloud. That was quite a battle, so we've worked with the FSA as well, together with Google, in fact. We're also on the customer advisory board of Google, and we were the first to launch mobile payments in Norway. As I mentioned, we used to be called Mcash, and we changed our name when we entered into an exclusive licensing agreement for our technology in Norway, and we're now selling this end-to-end retail banking mobile payment platform globally on a white label basis. It's managed service, software as a service, and we run everything. So that's what we do.
Great, thank you, Megan.
So Starling Bank is often referred to as one of the leading challenger banks here in the UK, but we like to think of ourselves as a tech startup with a banking license. So we were founded in 2014, and over the course of that time, we've basically built a bank from the ground up, building both the back-end and front-end technology, as well as building out our API and lockstep to have a PSD2 ready API and open banking platform at launch as well. So this year we launched in May with the first digital-only retail banking account. So as you've seen, there's a lot of challenger banks that are entering the space, and we've kind of emerged in the UK as the first digital challenger to launch current accounts this year, as well as the PSD2 ready banking platform. And what we're really focusing on is purely the retail current account, and then building out what we call our marketplace, which is how we partner with best-in-class fintechs from across the industry and help to connect our customers with those different financial products and services, all from within Starling Bank.
Hi, I'm Didier. I'm heading the Bank Build project at Zopa. I mean, for those of you who don't know who Zopa is, I mean, Zopa started in 2005, really as the first kind of fintech really in the world, and in 2016, we've decided to kind of launch a bank alongside it. And when Zopa started in 2005, it was really to offer a better deal to both borrowers and lenders at the time. Because, I mean, your question was around, do you think that's a force, in the market? And really, Zopa, when it started, it felt, hey, we're not quite sure whether customers are really getting the better deal. And again, if you think back in 2005, really, there was no banking app. I mean, the iPhone had not even launched, right? So, you can see that kind of Zopa started this whole movement at the time. And then for us, the reason to apply for a bank license, because unlike Starling, we're not a bank yet, so we hope to launch sometime in 2018. But the reason for us to launch a bank is really to be able to offer even more products to our customers, because we believe we've done a great job on the products that we've offered thus far, but we feel a bank license will enable us to offer even more products and give customers an even better deal in the future.
Okay, and at Seco, we've taken a slightly different approach. So we thought, well, how do we solve the problem a bank solves without being a bank? It's like Airbnb, solves the hotel problem without being a hotel. So what's the banking equivalent to that? So we realized that banks, if you strip it all away, banks just kind of manage your wealth and allow you to utilize your wealth. And in our vision, wealth is the contents of your character, not the size of your wallet. So we're moving away from wealth being purely monetary representation of how wealthy you are to actually being things like your data and your identity. So the difference in Securids, for example, you could deposit your data into your account as well as your money, and you can earn interest on how interesting you are rather than how much money you have in your account.
Fantastic, thank you. You've all described models that are radically different to traditional ways of doing banking. What is your approach to dealing with traditional banks? Are you looking for sort of friendly coexistence or murderous rivalry? And what's their approach to you? How do they engage with you?
Maybe, I just want to say a little word here because actually we partnered with Metrobank. I think it was probably in late 15, early 16 as well, where we partnered with Metrobank, kind of, where they realized that we were, offering, a great service to our borrowers, and that, we had only, retail lenders at the time, and they felt actually we might be interested to lend on your platform because we think you can originate assets very well. So, for us, that was a first, partnership with a completely mainstream bank. And when you think about it, Metrobank also, when they started, felt, hey, we want to offer a better deal to our customers, and we see in Zopa also a company that wants to offer a better deal to customers. So in that way, I think we were set for a good cooperation model. But obviously, there are times where we will compete with the larger banks, for instance, on consumer loans, for instance, right? So I think you will see both cooperation and competition happening side by side. And when you think about all the people that have come before, the large incumbent banks are also realizing that the customers are demanding much more service, much more value, let's say, from their banking services, right? So they also will seek to partner, either buy or invest in new fintech companies. So I think you will see all these models happening over the next few years.
Right. Daniel?
Yeah, I think we have some real-life experience in terms of the dynamics that we see, because what we see is that there's this wave going on where you vary from collaboration to competition, fragmentation, and coalitions. So from our region of the world, still the world champions in adopting these new fintech services. We see that when we launched as the first mobile payment solution, which was direct to consumer, based on our own license, doing to some extent what Starling is doing, addressing the market directly, it was because we were unsuccessful, miserable in selling our technology to banks. We were just way ahead of the curves. When we were trying to sell it to banks, nobody wanted to buy. So the original plan was to be a technology provider enabling that sort of now called fintech revolution before the concept of fintech was even invented. So we were just way ahead of the markets. We were completely, utterly miserable in selling it. That's why we decided to go D2C, which I think is part of the dynamic that we will see. Many of the fintech companies that are bringing great pieces of technology to the market are struggling to reach the market because they're either trying to sell to banks, which needs to transform from the inside and out, not in terms of adopting technology, but in terms of the organizational impediments that they're meeting. They're not able to make these decisions. And it's been mentioned multiple times from the earlier panels as well, that they would like to change the world. They're just incapable of doing it. It's not a technology thing, it's a cultural thing. So what happened in our market, which is a key learning that I think will happen in many other markets as well, especially come PSD2, is that some challenger manages to bring a good piece of technology to market that consumers actually enjoy at a level where it starts to make an impact. And then, depending obviously on your business model and what you would like to do, the invitations will come from the banks to partner with you because you're sailing up on the horizon as an actual competitor. You're not just a technology vendor, you're an actual competitor, which forces them to have an opinion about you. And in our setup, it ended up being very competitive, and a bank that was a latecomer to the mobile payment revolution that we've seen in Norway. I mean, we have more than 65% market penetration for mobile payments. Everyone is using it. These are not NFC-based payments, it's app-based payments. Everyone is paying with an app, everywhere, to everyone, all the time. My kids, my grandmother, everyone. So when that happened, the banks just had to get on the bandwagon, and because they don't have the capabilities internally to develop the piece of technology that we've done, they called around and said, I'm sorry, we were wrong, you're right, is there any way we can do business? And I think we'll see that type of wave of banks trying to partner with fintechs at a higher rate as the competition arrives. But it's our job and your job, because I'm supplying to the banks now in competition with you, but I think it's the fintech community's job to actually push forward and get real customers on the platform and then try to partner and sell. Because I think it's extremely hard to just sell a concept, a piece of technology, into the banks as of today. There's only a few good examples. I mean, BBVA was here, Santander was here earlier with Steven, talking about how they partner, but it's still baby steps.
Is that the same from your perspective, Megan, or
There's
different?
some elements there that I would say are similar. I suppose to set some context, when we were founded in 2014 by Ann Bowden, she had come from a long career in banking. And basically what she had seen was that up until about 2008, banks had been reasonably good at keeping pace with technological change. But at that point, you had the financial crisis. And so not only were there numerous new rules and regulations and heavy fines being imposed, but that was also the year that some of the most transformative innovations in technology came to market. So first with the iPhone, and then Uber and WhatsApp, Airbnb, Lyft. And then what we saw was that this gap started to emerge between what the banks were offering, particularly in terms of user experience, and what consumers were starting to expect. And so when we founded Starling, it was very much with this idea of being able to build a bank from the ground up, particularly to be able to take advantage of the latest in technology and bring that type of innovation and seamlessness and intuitiveness that consumers have benefited from everywhere else in their lives into banking. But the second piece was, so from a technology perspective, banks weren't keeping up. But from a business model perspective, they weren't really suited for it either. So typically what happens from a traditional bank's perspective is that they'll incentivize consumers to join their current account with a loss-making introductory offer. So that's cash back on spending or free travel insurance or a cash lump sum. And then the way that they make revenue is then they upsell higher profit revenue products. So that's like credit cards, mortgages, and loans. But what that means is they hadn't been incentivized to increase either the price or the user experience of the retail current account. So last year, when the Competition and Markets Authority did this industry-wide analysis, they basically found that result. They weren't helping to increase the user experience of the current account. They were intentionally making fees too complex for users to understand how much they were paying, where they could get a better offer. And so that's why they mandated open banking, to ensure that banks share their data and help consumers to access the best financial products for them. So when we started, it was with this perspective of building a bank from scratch, utilizing the latest in technology, but also having a new business model where it's not about upselling higher profit financial products, but help consumers to be able to access and compare and select what's right for them. And so for us, we're more than happy to collaborate with banks. So like when we had our first hackathon, NatWest was one of the participants. But oftentimes what we see is that from both this technology perspective as well as a business model perspective, collaboration doesn't exactly work well within the existing model. So I would say that from a collaboration perspective, it's much more with other financial technology providers, TransferWise and others, than with traditional banks, but we're very open to it.
So Chris, you have a slightly different value proposition. So does that shift the way you relate to the banks?
Yeah, it does, yeah. So we had quite a lot of fun speaking to the banks. So back in 2015, we were going for institutional investment. So I did the tour of all the UK banks and further afield, explaining what we were building with Seco. And it was a big challenge. It was a challenge to get them to understand what we were doing, really. We were maybe a bit ahead of our time, talking about data being currencies back in 2015. Now I think things have moved forward a bit. A lot of the digital ledger technologies that were based on, a lot of the concepts around the value of data are coming to the forefront with things like GDPR and PSD2, things like that. So I think there's a lot more potential now for collaborations with the big banks. But now we're in a position where we're not necessarily looking to augment their services or replace them in any way. We see ourselves as something working parallel to what they're doing as a whole new business model innovation. So there's potential for collaboration from offering supplementary services for their customers. And if they want to move into managing of data as a future business model, then there's potential for collaboration. But right now, I guess that boat's kind of left now, that idea of collaborating with the big banks as a partnership and building this together. We kind of moved beyond that a bit now.
So, Megan, you mentioned the customer's perspective, and that's something I just want to pick up on. 10 years ago, the talk was about switching, and there was almost the assumption that you had one primary relationship and that was what you switched. Is that what we're looking at now? Are we looking at customer switching, or are we looking at them having more a portfolio of different products?
So what we see still is that consumers typically they might have multiple bank accounts, but what's often the case is that they'll have a primary bank account, but then they'll have a number of different financial products that they'll use. So they might use a wealth management provider like Nutmeg or Moneybox. They might use a different service for foreign exchange, a different service for their mortgage. But what they'll see is that what we want to do because of that type of fragmentation with all of the different products and services that people want and use, but they're not connected in any way. And what makes it a little bit more challenging is that there's been an influx in venture capital into financial technology, particularly in London is still the fintech capital of Europe, which has been a huge positive. But then there's almost so many options and so many great choices out there that provide amazing user experiences and very low prices, but sometimes it can be difficult for users to navigate. So what we see our role as is being able to have this opportunity to bring that together and to provide some transparency around what are the options, who's safe to use, who's right for you to use, and helping consumers to make that decision and pulling that into the bank. But that's more around still from a central bank account, but in terms of linking with other financial complementary products and services.
Daniel?
Yeah, but don't you think that, tomorrow marks the day for 6 months until PSD2 comes into force, at least in law? There will be a transition period, obviously. There's a lot of lobbying for that. But I think one of the key elements of that will probably be the next wave, because what you were talking about, Megan, is the process internal to these banks that are trying to sort of do incremental optimizations to compete with guys like you. So it's the same products, it's the same business model. Let's just put some lipstick on and try to compete, which in reality is not really competing. And then on the back of that, you have guys like you and a whole forest of fintech companies trying to create all of these new great interfaces. But the main problem is that they're either not connected to everything, so it doesn't become this one-stop shop for you, which hopefully PSD2 is going to do something about, enable us to choose that one favorite thing where I can actually manage my money and see my accounts. That's going to be very interesting. What I think is interesting to look at is whether or not the banks that some of the people in the panel are challenging, the traditional banks, the incumbents, whether or not they will continue to do incremental technology steps to just make their business more efficient. Because that's one thing that we see. Several of the banks just say, we're not even remotely able to create these new great products. Yes, we can smear some lipstick on top of the services to compete in terms of user experience, but at the end of the day, user experience is just user experience. It needs to be great, but it's not a product. It's just a better user experience. So the interesting dynamic that I really look forward to see come PSD2 is whether or not the banks choose then to become infrastructure and just make their current business way more technology advanced on the back end to just reduce the cost of operating, but continue to operate exactly as before. Just reduce the cost. So basically throw away all the legacy and build it again and become a bank remodeled, but do exactly the same. Or if they're going to strategically fight towards the forest of fintechs and become the owner of the eyeball, so to speak, because there's a great opportunity for the established banks. I mean, all of them have the same rights as anyone come PSD2 to aggregate everyone else. So the interesting thing is who is going to be the #1 channel towards all your money. That's what I'm looking for. I can't wait to see who wins. And I think Facebook might be interested.
Didier, did you have something to add?
Yeah, I mean, I think on the fragmentation, I think it will depend on the take-up of open banking and PSD2. And it's a good analogy you make with Facebook, because you could have a world where someone is just providing you the login and then aggregates with all the others, where essentially you have 20 relationships, let's say, with different providers for your loan, your mortgage, your card, etc., and always getting the very best price, where the aggregator might not even be a financial company. I mean, it would have to for regulatory reasons, but would not necessarily need to have any financial background whatsoever. So I think it will be interesting, as you say, to see how the market develops over time, and what's the user take-up of those products. Will customers be willing to use their, let's say, fintech login across multiple providers in a way that they've done thus far with Facebook or Google? I think that's going to be interesting. Just on consumers, I think you made a very fair point where today, Netflix and Amazon and Apple are setting the bar for what is great user experience, right? I mean, people now expect very fast delivery of everything, right? It's staggering that we could order a package from Amazon right now and get it shipped to us in a few hours. But if I spend money on my large incumbent bank card, I will not see it until tomorrow, right? I mean, that's the world that we live in today. So where shipping a package right here from somewhere else is faster than just displaying information. So that shows, to your point, the scale of the change they need to make. And even if they wanted, as you said, really, rewrite it from scratch, it will be a huge, decision for them, right? I mean, you could argue either way. I think it's going to be very difficult.
Chris, did you want to comment?
So just to build on what you guys have said, so I don't think people are going to be switching to challenger banks en masse. I think a lot of people opened up in parallel. It'll be like credit cards today. So you have your current account and you have a whole bunch of credit cards with third-party store providers and all sorts of things. So that will happen. I think what will happen after that, everybody's going to be scrambling to build the ultimate dashboard, right? It'll be like everyone's going to say, this is the one dashboard to rule them all. You need our dashboard, right? And it's going to be really fun to see who wins out in this kind of battle of the dashboards. What's going to happen is these dashboards are going to get more and more complex. They're going to be like switches and dials and pie charts showing you how much you spend on coffee and your glide path of your spendings and earnings. And they'll be like your pension over here and your savings over there. And it'll look like the cockpit of an aircraft. There'll be like so many dials everywhere. But then you think, what does a pilot do when he gets into the cockpit? He just switches on autopilot and goes in the back and talks to the stewards and stewardesses, right? They don't spend the time doing all of that. So what's going to happen is that we're going to evolve from having crazy complex dashboards to basically just having a very simple, almost command line interface with our banks. And at that point, we'll not bother about who is underwriting all this banks. It'll be so virtualized on another layer that we'll care less about who our bank is than I do today about which power station generates my electricity.
So we've talked a lot about customer experience, and I guess I want to take it a little bit deeper and just ask actually about kind of the social purpose of these banks, because we've seen in the financial crisis and since that actually a lot of banks weren't and possibly still aren't playing necessarily a very socially useful role. At the same time, we've got challenger banks very much selling themselves on, we're different, you can trust us with a good bank, the bank that you'll want your friends to use and so on. Beyond the user interface, beyond the different experience, what really distinguishes these banks in terms of the way they impact on communities or the power that they give to customers?
So it's been interesting for me to witness a lot of the adverts you see on television for the banks. So they're very much trying to rebuild some of the bridges from the financial crisis. And you see they appeal to your heartstrings. There's lots of kind of emotive music. They're like a John Lewis advert. And you see like horses galloping through hospital wards and all these kind of things like going on. And what they're trying to do is say, trust us, we've been around for 300 years and you still need to trust us. But what I feel like is that banks are missing the point. Yes, you have big corporate social responsibility budgets and they're doing good work for charity and all this kind of stuff, but really they have to truly mean it. Ultimately they are there for shareholder value, right? That's their purpose. That's a raison d'etre, right? They have to realize that that's not how customers view them. Customers view banks as institutions alongside institutions like the NHS. They're not just there to service their accounts. They have a higher purpose. Banks don't really truly get that. Some of the challengers do because they're small enough so that they have a vision to truly change society for the better. And a lot of the more specialist ones focus particularly on subcultures where they are financially underserved. But I think until banks realise they truly get that they are an institution, not a business, they won't shift into truly helping customers. And there's good work happening. So if you look at movements like Comms for Good. So if you look up Comms for Good, there's a lady called Kate Bolton. And what she's doing is joining together a lot of the banks' charity activities that they do. So that instead of all the banks competing saying, hey, look, we do something for cancer over here, or we do something for AIDS victims over there, right? Actually, if you join all the banks together and say, if you all participate together in your corporate social responsibility activities, then ultimately you'll raise the reputation of the institution as a whole, and as a rising tide raises all boats, it's just better for the financial services industry in general.
I'd say there's a number of ways that we're tackling this. So from a very basic level, one of the things that banks have been criticized for are fees, either complex fees or hidden fees. So an example of this is like you go traveling with your traditional bank card, and then when you spend on it, they inflate the exchange rate, so you don't get the actual exchange rate to increase profit margins. And then there's an additional fee on top of that. So one of the things Starling is really big about is we have no fees. And if you spend abroad, there's not only no fees on it, but you just get the exact exchange rate, the real exchange rate. So that's one element to it. On the other hand, it's also around that upselling of products. So the other things that was the big criticism was banks often upsell and sometimes even missell financial products. So we took a drastically different approach and said that we're just going to focus on the retail current account. We don't also want to be the world's best mortgage or insurance or any other financial product. Instead, we just want to provide transparency and access to those for our customers. So in that way, giving customers choice and transparency. And then beyond that, it's all around not just doing those kind of baseline things that should almost be expected of banks, but then going and trying to help people give better data, better tools to understand their finances and to make better decisions. Because at the end of the day, money is very emotional. It can either cause a lot of happiness or it can cause a lot of anxiety, even in some situations, embarrassment. And so really taking to heart at our core that need to help people manage and understand their finances better, and not just to give them a million different buttons to configure and optimize that, but to really take the stress out of it, to make it so intuitive, so simple, to have a kind of autopilot button like you're saying, to bring that into banking is really what we're going after. And that's how we kind of see our social responsibility.
Thank you. Daniel, I think you had something to add.
Well, I think it's sort of a conundrum as well, because all of these are, yes, they're institutions, but they're there for their shareholders' value, right? So it's this very diverting interest to some extent. What we've seen with some of the banks that we've been working with is that once they realize that bringing new products to market actually solves problems for their customers starts to like them. It's quite interesting. And it's not quite typical, right? As we've all shared the insights in terms of how we believe our relationship with the bank is sort of, oh, well, the financial crisis, we don't really like them, but I depend on them, and yes, I hate them, I'll have multiples, rather than having somebody really solve problems. We've seen that from the Nordics, that when the larger banks then brought the technology to market to empower people to pay and get paid easier, faster, actually cheaper, actually in Norway right now, for free, in real time, it empowers a lot of people to fall in love with those services and inherently then fall in love with whoever is providing it. And I think that's the main key. Obviously, this is very dependent on what market that you're entering into. I mean, if you operate in less sophisticated markets, it's about financial inclusion, which is basically the same thing. I mean, I was on a panel with some representatives from Lloyd's, and they were very proud about their incentives for, including everyone. I just made out the point that there's millions of people in the UK that are defined as financially excluded. And it's quite a technical and tech-savvy and a market that shouldn't be financially excluded in any way, but then it comes down to what products you're providing. So for me, it's driven by technology and the passion of bringing products to market and really enabling people to do commerce. We see it also in the Nordics with these mobile payment solutions, is that providing a very easy-to-use commerce tool so that anyone that wants to sell something, whether or not you're a private person or if you're a merchant, you can also use the scheme. Enabling people to do commerce is also financial inclusion, and it solves problems, and it includes people and makes them fall in love and depend on the product that you're providing, which I think is key for the banks to understand. So not have these silo thinking. A short final comment on it is that when we sell our technology, we're often hit by, it needs to be a business case, it needs to fit one of the silos, and it needs to make money sort of within 3 months. And when you look at the investment that was done, so DNB, the largest bank in Norway, invested about 65 million euros in cracking the code on mobile payments in Norway. Now, close to 70% of the population is using it. They were losing money like crazy, and now they're turning a huge profit. So it takes some time. It is a different way of thinking about it. So it's driven by technology, creating great products that solve problems for people, and then you are actually responsible because you're enabling people to do business, and they fall in love with you. So that's the right way of doing it.
Thank you.
Yeah, so I think you need to have a much longer term view than maybe you had, let's say, historically, where you need to realize that creating savings for the customer or enabling them to maybe not take your product, but a product from a competitor, but you feel, hey, it's cheaper, it might be better for you. And it might be impacting your P&L negatively today, but you are creating, long-lasting value. And I think the key to remember is that in the end, I think the customer is the winner here, because when you think about over the last 10 years, let's say the bang for buck in your financial services products really has dramatically increased. I mean, when you just mentioned the feature of the Starling card, which is free right now, it's quite amazing compared to what even some of the existing credit card that you need to pay for are providing you as a service, right? So I think it's in the end it's a lot of savings for the customer that they can then spend on whatever they want, a holiday or a new car.
Wonderful, thank you. I've been told we're out of time, so I'm afraid we don't have time for any questions from the floor. But I want to thank you for being such a great panel to work with. And if you could show your appreciation, please.